what they'll do is they'll take all that property that is 27.5-year property and they'll segregate it. That's why it's called a segregation. And then they'll take that other property that's under 15-year property and then they'll accelerate that portion for depreciation. Okay. I probably butchered some of this, but I'm trying to give you guys the quick overview of what this looks like. Now, the percentage breakdown between under 15-year property and over 15-year property is typically anywhere between 20 to 40% of whatever you purchase the property for. Okay, so if you bought a property for $1 million, they do a cost segregation and say, yep, roughly 30% of it can be depreciated immediately. So roughly $300,000 minus the cost of land value before people are like, well, you have to include the land value. Okay, I get that. There's land value. So roughly $300,000 in this example right here. Imagine if you had, $10 million right here. If you had 10 mil worth of property here, right? And you did the cost seg, then you have roughly, let's call it 3 million of losses that will pass through your holding company right here. And where is it going to go? It's going to go straight down to the shareholders or the members of the LLC, right? Okay. Now that's how a lot of these folks offset all of their income, right?